Okay, so this is a very great question for business owners who have good amount of net income. You're going to love this, so please do watch it. So question is, Deepak, I have a $300,000 I made in 2024, and I'm wondering if I should just buy a CD under my business account with that money, or should I transfer it to my personal account? I have an S Corp. Okay. So you can see this sounds like a very simple question, but there are a lot of principles that are built into the solution for this problem here. So I'm going to break it down for you and we'll discuss it together. If you have a follow-up comment, please do leave it in the comments. And if you have a tax question, then you can certainly subscribe to this channel and leave those in the comments as well. And I'll try to answer those the next time. All right. By the way, my name is Deepak and I'm a tax code advisor. So if you're looking some help in filing your taxes or, figuring out strategies to reduce your taxes for 2025, then I'm your guy. Just reach out to me via taxcodeadvisors.com. All right. So let's go back to this question. So first of all, let me break it down for you. What is he really trying to say? He's saying, hey, I have a great cash flowing business that produces $300,000 in income. He's not really saying that. I mean, maybe it's an exceptional year. Maybe, other years it's less or more. I don't know. But I have to assume that's a good cash flow business because it's a $300,000 of net income. That's wonderful. So first question we got to answer is, does he pay tax on that $300,000 if he does not take the money out of the company? That's the first question. And the answer is, yes, he does have to pay tax. So it's not a tax-free income. See, S Corp does not pay taxes. Whatever income is earned in S Corp is passed on to the shareholders, and the shareholders report that income on their own personal tax return. So in this case, if his S Corp produced $300,000 in net income, then he's going to get a K1 for that $300,000, and he's going to report that income on his personal return. Now, if he takes the money out, does anything changes? No, it's the same thing. It's just still $300,000 K1. He still reports in personal tax return. The only difference is that money is, in one case, sits in his business account. In the other case, it sits in personal account. But from a tax perspective, it makes absolutely no difference at all. So if you're thinking about doing this strategy that, hey, if I don't take the money, it will save me taxes on $300,000. To my friend, you're wrong. That's not going to happen. You would still pay the same amount of tax whether you take the money out or you don't want to take the money out. Now, there are other reasons why you do it one way or the other. So let me talk about those. Now, if you do not take the money out and you leave it in the business account, so my first question to you would be is, how are you going to pay the taxes on that income? So let's say if your tax is $60,000, do you have a $60,000 sitting in your personal account? Maybe the answer is no. In that case, you're going to write a check either, most likely you're going to write a check from your business account because you don't have the money sitting in your personal account anyway. In that case, that $60,000 will be considered a distribution. Again, no impact on your taxes, doesn't make any difference, but that $60,000 is out of your company. You use that money to pay the taxes, and $240,000 will remain in your company. And you can use that $240,000 to buy whatever you want to buy. Like you said, if you want to buy CD, that's fine. So that's number one. Number two, if you leave it in your S Corp, or actually, let me go back 1 second. If you want to take out the money, then obviously you need to make sure you have enough basis in the company. And I'm assuming you do because you're at a $300,000 income. So more than likely you're okay there. But just in case, sometimes basis can be really awkward. So I thought important to mention that. If you don't have enough basis, then you can't take the distribution. So you got to be careful with that. Okay. Another thing we got to talk about here is if you leave the money in the business account, that can have a lot of liability problem. So I'll give you an idea. So imagine, let's say you are a gas station, or you are a restaurant, or you are a lawn mowing company, or you are a construction worker. There is a lot of risk. People can fall on your property, they can hurt themselves, all kind of things happen. Now, if you leave the money, so let's say you have an LLC set up or an S Corp set up, whichever way you're doing your business, or maybe even a C Corp. If somebody sues you because they got hurt at your property, they sue you, and you have this $300,000 sitting in a business account, or you have a CD under your business name, what are you really doing at this point? At this point, you have created a big mess because these people can go after your business and they can go after the savings because it's your money. They can claim it. Sometimes people have like multiple companies and they try to move distribution from one company to the other. That's even more worse, because now what you're doing is now you're linking two companies together. You are literally creating what we call is a corporate veil. You're violating that corporate veil at this point, because the funds are moving freely from one company to the other. That means there is no LLC, there is no S Corp. So you're kind of creating that kind of issue. So you got to be careful from a liability point of view when you are keeping the money in a business account. On the other hand, let's say you take the money out of the business account and you put it into your personal account. And let's say you have an LLC, S Corp, or C Corp, whatever your entity is. Now, all of a sudden, there is a clear separation. There was an income earned, you paid taxes, you took the distribution. They cannot go after your personal assets. So those assets are fully protected at that point because you took the money out. Like I said, from a tax point of view, doesn't make any difference. Now, there's one reason why you might want to keep it in the business. If your business is not risky and you don't have to worry about liability and all that. And that is, maybe you have a lot of income 1 year or 2 years. So that means you have a lot of good retained earnings sitting in your S Corp, like he said, 300K. And maybe next year you're not going to have a 300K sitting. Maybe next year it'll be $20,000 or $30,000. So what you might want to do is that S Corp has some expenses that it's writing off. So why keep that income outside under your personal name where you would be paying taxes on that interest income? Instead, maybe you keep it in a business account. And next year, let's say if those $300,000 earn $30,000, for example, and you have another $30,000 income in S Corp. So now you have a $60,000, and maybe you have a $40,000 in expenses and $20,000 worth of payroll. And now altogether, there is no income. So now it balances out to zero and you don't pay any taxes on it. So that could be one reason why you do want to keep it in a business account. So you can see that there are a couple of things that we got to play around with here. One is the tax part of it. Another one is the liability part of it. Personally speaking, it could be either way, depending upon this situation. How are you dealing with it? If your company has a lot of expenses that you can write off and you don't have any other income in future years, in that case, maybe I would keep it in a business account. Maybe that would justify that kind of a risk. But other than that, maybe I'll move it out and I'll move it to some other entity or something else. So that way my cash is not linked. I will certainly not going to move it into my another business from here. Even if I want to move it to another business, maybe I'll take a distribution first and then I'll invest into another business. I would not going to link my two businesses together. That creates even more problems for both of my business. Now I'm risking both of my locations altogether. So that creates all kind of mess. My recommendation to you, sir, is set up one-on-one consultation. Let's talk through this. Maybe I kind of gave you a bunch of good points, but there's usually many other things pop up when we are talking in person. And oftentimes we find a lot of opportunities and I'm able to identify some risk that you might be overlooking right now. So if you want to reach out to me, just go to taxcodeadvisors.com and you can reach out to me from there. But it was a wonderful question. Thank you so much for asking that. I hope other people can learn from it as well. And those of you guys who are new to my channel, my name is Deepak and I'm a tax code advisor. I'm here to help you solve your tax problems. So if you want to talk to me or join one of my webinars, seminars, then just go to taxcodeadvisors.com and just reach out to me from there. Thank you so much and I'll see you next time.